Hi guys. Hey, just figured I'd make a quick video. I was talking about going through my watch list last time, and I figured I'd go ahead and do that now. But I want to show you guys a couple quick things here, really quick. So first of all, let me. If you guys are interested, as you kind of progress through, one good thing to do is to start journaling, writing down, what you're seeing, what you're thinking. When people started first telling me that, I needed to start journaling, and I was like, well, what do I journal? What do you keep track of? and and uh, and uh, and so I didn't quite know. Okay, what am I supposed to write down? There's a couple different things. I mean, I kind of went overboard. I had an Excel spreadsheet where I was keeping track of my positions, what I bought in at, where support was, where resistance was, all that kind of stuff. I was heavily overworking myself and overthinking things, because trading should be boring and easy. That's ultimately the goal where you want to get. But so anyways, for journaling, there's a couple different ways you can do it. You can do it with paper and pen, but you can also this trader view. They basically you can open up a free account where you can actually upload uh, up to, I think it's 100 trades a month or something like that. Which, if you're swing trading, that's easy without going over the 100 trades a month. But like I do a paid one where I pay, I think it's 29 bucks a month, but it's unlimited trades. And what it does is, from Thinkorswim, I can go ahead and download my trade activity and then upload it into this program, and it processes it, shows me my numbers and my metrics. Basically my win-loss percentage, shows me what day of the week I tend to do better, what setups I do better on, what times of day. It breaks down. I'll show you a quick. So for instance, here's a bunch of my trades, and I've tagged them with different, like what are they? Like ascending channels, 38 trap, previous peaks, this FOMO breakout one. I put that in there just to let me know that I took that trade and I shouldn't have. Just so, and as you can see, I lost almost 10 bucks on it. So it just helps me to see that I took a shot on this, and it bit me in the butt. So, but anyways, yeah, it's a good program. If I were to go to my reports view, it shows me gross daily profit and loss, and as you can see, the market's been kind of crappy this last week. And I've been trying out a few new things as well. So my P&L, my equity curve. Yeah, I'm still $4.13. Well, according to this, I haven't uploaded the last couple days of my stuff, so I'm actually back up into this range here. But yeah, I mean, you can break this down. You can go. It shows you all the different things. What day of the week you do good by what type of price and volume and instrument and market behavior, and what your win-loss expectation is. Win-loss versus days. I mean, it does a lot of cool stuff. So there's a couple of them out there. There's TraderView. There's I forget what the other. In fact, let me look it up here. I've got it on my phone still. I got the paid version of this other one, and it looked good. It was all black and dark mode and looked really nice, but it just didn't have all the all the stuff that I'm hoping for, that I'm looking for in that TraderView had. It's called Trader Sync. I don't know if you guys can see it, but Trader Sync is another one. They have a phone platform as well with web, all that kind of stuff. So, anyways, let's get to this. So, the last couple of videos I've touched on the 38 trap setup. 38 trap is a very simple setup. I'm going to kind of piggyback on that a little bit, and show you it's kind of like a combination of 38 trap as well as like playing previous peaks, basically at range breakouts. So looking at this one, CHD, first of all, before I dive in that, let me show you guys this here. I want to show you kind of how my week has been in a nutshell here. So this was one of my trades this last week. I went ahead and identified this level of resistance right here. I had a nice, 38 trap. Well, it wasn't a 38 trap. It was more of a flag. I was hoping for a flag breakout, because there was a lot of interest to get this price above this level right here at 293, right, or 292. So what I did is I went ahead and placed a buy order at 295. I can't remember. I had like 80 plus shares. So anyways, I placed my buy order at 295. It got filled the very next day, and what did it do? It popped and dropped right back down in the range. I was like, oh crap, and I knew at that point I should probably just get out of it and leave it. Even though TMOs were both highly positive, things were looking really good for the stock, and and basically here's what I saw. We've got a flag within a flag. Does that make sense? We had a small, tiny micro flag within a larger macro flag of the last, since early April, as well as it was a cup and handle. Okay, so you had the cup and then you had the handle. Okay, so I had a micro flag within a macro flag within a cup and handle, and I'd be willing to bet if I went to like a year or whatever, you'd see another macro pattern that it was setting up for. And that's the cool thing about trading is that you literally, it's like the Matrix. You get to figure out all sorts of cool stuff. So anyways, as you can see, what happened here, I placed my buy order, it pops, it drops, and the next day I had my stop 5% or 3% down. I think it was about in this area here, 280 something, 284 I think it was, and it stopped me out, so I got stopped out for a loss. At that point I was like crap, so I left it. I didn't do anything with it. I should have placed another buy order back above that level, and been willing to take another 3% loss. Because the chart hadn't broken. The flag, this micro flag, slightly broken because, it didn't perform as I was expecting. But the macro flag was still working. So I should have placed another buy order back up at this $2.95 to $3 level. So a couple days after that, what did it do? It dove a little bit more. And guess what? It ends up running to $9. Just 1, 2, 3, 4, 5 days after I got stopped out, it ran to $9. And you figure 80 shares times $7 in profit, roughly, $560, $600. If I had my trailing stop, and the thing is it's probably still going to run some more because we've got another flag forming here. Well, basically this is called an inside candle. So basically if I see another one of these inside candles, I'm probably going to end up putting another buy order here at about $7. So we'll see how that pans out, but just a sec here. So yeah. So basically what that is, that's a quick lesson on what market makers try to do. That's basically how ruthless the market can be sometimes. I had a good setup. I did everything by the book. I followed my stops. I followed my rules. Yeah, I missed out, but guess what? At least I'm not bag holding, and this thing is like still teetering down near $1. So, anyways, now let's get to what we came here for. So with the 38 trap, let me zoom this out just a hair here. I'm on the 4-hour chart. Let me switch over to this monitor here. This right here is a one day per candle chart. Okay, so let's start back at basically with the 38 trap. What I'm looking for is number one, first and foremost, and pretty much with any trading system, unless you're contrarian, is you want to find a stock that's uptrending. So this is not a good candidate for me. But what I'm going to do is I'm going to go from the low and just create a trend line. Okay, so we have a trend line. We know that that's been the absolute bottom 3 different times. Okay, so if this share price were to fail and come back down and touch off at this area, in fact, let me extend this to the right. If it were to come down and kiss off that area, I mean, that would probably be a pretty good buy point, right? No, you don't want to buy price going down. You want to wait until it verifies that that is the bottom. Okay, what I mean by that is, let's take for instance this little area right here. Okay, what do we have here? It comes down, it kisses off of it, price begins to uptrend. That's why I have this 17 EMA here. So that way, once price breaks above it, I'm looking for now the 3 and the 8 EMA to break above it. Okay, once they break above it, I'm then going to take the next highest level, which would be right about here at the 585 level, place a buy order. Okay, once I place that buy order, at that point, if price is going to go above that, it's going to fill me and I'm going to be in. And if I would have placed a buy order right there, what would have happened? It would have, once it broke that level, I mean, everybody's looking at this. Everybody's looking at this. Pop, right? And you could trail stop it, you know. Now, what do we have here? We have, dang it, you figure right here we have what we call, could be considered a 38 trap, but it's not. Okay, we have price pulls back into that 3 exponential moving average. That 3 exponential moving average could be another buy point. You know, like for instance, let's say you sold off on one of these peaks up here at 723 or something like that. Okay, you're looking for a re-entry because this chart is moving upward. And that's another thing is once you place a trade on a chart and you win off of it, that doesn't mean you're done with it. Okay, once you win and you take your profits and stuff like that, if it's moving up, you keep playing it. You know, you keep finding ways to play it. If it's moving down, don't keep trying to find ways to play it. You want the overall trend to be moving in the upward direction. Another thing is look for trends within the trend. Okay, it's like I said, that's a cool thing about trading is that, you know, you're looking for, it's like you're breaking code. You know, it's a mystery. You know, and that, I think that's what intrigues me the most about it. So anyway, so I've got another upward trend within an upward trend, right? Now, how am I going to define this? You know, I can draw trend lines from peak to peak. What do we have here? We had a little ascending upward channel, or you could even call it a flag of some sort. What happened once price broke out of it? Okay. Now we're looking at other setups, such as other levels of support, because obviously right now we want back into this trade because it's moving upward. So what am I going to do? I'm going to create, here's a peak right here. So this 1619 might act as support. It might not. Another thing is, let's say shoot. Let's go from the base of the candle to, so that might be a trend. And some of the ways to find out if this is going to be the proper trend, you can extend these trend lines to see if they line up, or, as the term I've used before, show confluence with other levels. So for instance, I might, this peak right here, I might consider that, and consider the base of that candle right there. So this may very well come down to and bounce off of the 1691 area. I mean, it's hard to tell. It's hard to tell. Now, yes, sir. The thing is you're not gonna 100% of the time, or not even 30% of the time, pick the right trend lines. Okay, you're only going to see it after the fact. Okay, you can only place educated guesses. and you can read off of volume and all that other kind of stuff. I mean, you could do it, but where the magic sauce is that it's not about picking where to buy for profit. It's about picking where to buy, where would be your nearest support below that to where you could put your stop loss order, or to know when it's time to get out. Any trade you get into, you should always have an idea. Okay, so if this goes against me, or think about it like this: when this goes against me, where do I get out? Okay, so for instance, let's say I placed a buy order right above this level right here. It's 1952. I would probably place my stop loss order right about here at 1832, right? Okay. Or I would just do like I've been doing and do like a 3 to 5% stop loss. But just a second here. Let me move on to some actual charts that will show us the 3/8 trap. Here we go. Okay, this one's good. Let me switch this to a 4-hour, just to kind of show you guys. In fact, let's switch back over to my main monitor here. All right, so this is one I've already marked up, but you see this? See how it's? And I don't have this 3, 8, and 17 moving average on this one. This one's a little bit different. This is the indicators that I use to know when to get in or to get out. Okay, so I have an ATR trailing stop that I use and a simple 9 moving average, and the other screen is what I use to kind of, as I'm scouting stocks. This is what I use to actually to know when to get in, when to get out. So anyways, let me clear off these indicators, just because. All right, so as I'm looking at this, we have a nice, and these are 4-hour candles. Okay, so this is a nice leg. This is a nice, and there really hasn't been much sign of weakness on the bullish side of this going up. There's been signs of weakness on the bearish side because the red candles that there are look pretty weak, especially as you're getting towards the top here. So I would be inclined to think that above this $54.10 level, it could be pretty, because you got 2 hits on that level. If we get a 3rd hit on that level and it breaks that, I'm thinking that this may run pretty good, may even run up to maybe at least 59.10. And this is, let me increase my time frame here. 360 days. If this runs, I would actually probably aim for maybe this $60 level, because we got 2 peaks. We got 1, 2, and almost 3 hits of that level. I would almost aim for like $60 on this trade. But so anyways, first step, let's take our trend line. Let's go ahead and mark this up. What do we got here? We have a trend line. Obviously, that's a verified support. How many times? 1, 2, 3, 4, almost 5 times, right? Well, 5 times. We also, on the way up, we've had multiple 38 traps. Okay, so I'm just going to do from candle body top to candle body top, and so on. I mean, at some point, this is going to pop off the page at you. And it's going to hit you that, hey, this is pretty good. So, and then the last one we have here, we'll just do it like that. So as I'm looking at this, we've had 1, 2, 3, 4, 5 times where you had 5 trades within this since March 11th, right? 5 very good swing trades that you could have bought in at, say, 38.56. Sold off in the range of, let's say, 43.95. Bought back in again at 43.09. Sold off again at 50.26. Bought in again at 49.26. Sold off again at 53.46, and so on and so on and so on. The thing is what this area is right here, and this is why it's got me so excited, is that this area right here is a range, right? This is accumulation. This is people loading up, because what is this stock telling everybody? I want to go up. This stock is telling everybody I want to go up. So therefore, it's creating a resting period where people are just accumulating and accumulating and accumulating. Price hasn't broken below that level, that previous level. It hasn't broken below the trend. So therefore, you trust the trend. Now, I used to be in the frame of mind where I'd see this and I'm like, oh, what goes up must come down. No, what goes up may continue to go up more easily than it continues to go down. And it's the same thing with downtrending stocks. There's times where I would look at a downtrending stock and I'm like, oh, it's ready to pop, it's ready to go. This can't go any lower. And guess what? It went lower. Don't get sucked into that. Don't waste 2 years of your trading career like I did with that mentality. If it's going down, it's going down. Just consider it dead to you. So anyways, so here I'm looking at this consolidation. So what might I do on a daily? Like if I want to place a quick 2 to 3 day swing trade, I would probably go ahead and place me a buy order above this level right here, this 52.55. Right? I might place a buy order somewhere above there, maybe at about the 52.96, since it's previous resistance on this candle right here. So 53.05. 53.05. Let me get rid of this one right here. Alright, so 53.05, I would probably place a buy order at that point, and hope for a run generally up in this maybe 55 to 56 area. Okay, and then I would get out. I'd take what's mine and get out. Now, or I would parlay it, keep it, because I've got looks like a possible multi-day runner of this range. Let me cinch this down here. Alright, I might even place a longer term, maybe a week or two buy order at 53.97, knowing that once it breaks out of that range, that's the big break. That's the big break that I'm looking for. Alright, so just because we have that range. But this right here is what you're looking for. Okay, if you can get this pattern on something that is like, let me see here, see if I can find VTIQ. No, VTIQ is not a good example. Let me switch these to daily candles. I'm trying to find like a long-term uptrending chart here. I mean, even something like this. I mean, do you see any 38 traps? Yeah. I mean, look at this. 1, 2. You have a flag breakout here at that level. 3, 4. Look at that breakout. That breakout was a monster. You have a macro breakout. I mean, basically, you're just creating levels of support, well, levels of resistance, knowing that when there's a break of that level of resistance, there's generally a pretty good pop that follows, right? And what do we got forming here? It's a range. It looks like, nobody knows whether it's going to go up or go down, but what am I thinking? What's the trend been? The trend has been going up steadily, so therefore it most likely could go up. Could it bounce, reject off of this 812 area? Yeah, but I mean, yeah. Making this quick here. I just want to find a good uptrending stock to show you what I'm talking about. See, there's another one that did a pop and drop on me. Uptrending stock. It was a range breakout. You know what? Let's go to one of them that I'm in on right now. Not PCG. No. Oh, here we go. All right. So this is Sprott Physical. Multiple different patterns within this. Right now, I'm in it because I had a range breakout above this level. This is probably not a I mean, it's a good trade. It's just I should have let it fully break out of this area before getting in at 1388. Basically, I was using a break of this candle here, which I'm positive on it, but I'm hoping I'm wanting it to get above this 1403 level. Once it gets above that, then I'm looking at a pretty nice pop to the upside, maybe 1450-ish or more, before I'm going to look at getting out or phasing out. So anyways, I don't want to take up any more of you guys' time, but basically, just learn to go into a chart. Just find any chart. It doesn't matter what it is. I mean, obviously, you don't want garbage. You don't want something where it's just gappy. Really, you see, like, you don't want gappy crap. You find something that is uptrending. And if you're using Thinkorswim, the regression line and regression channels will be your friend. If there's ever any clue if it's an uptrend or not, choose regression line and start from the beginning and click. It's going to create a line for you. See, I can't change where this line goes. Basically, I'm just moving it from right to left, and it equates out the trend. It shows you the mean, or the average. Okay, so as you can see, this purple line shows me that this stock is in an uptrend. This regression line can also act as support and resistance. Okay, that's why once this price broke through this level, what did it do? It gapped down, because everybody that was in up here was like, oh crap, it's broke, and so they got out. So it acted as support. Regression line acted as resistance. Regression lines are really cool. Regression channels are the same exact thing. It's just you can define what levels you want. Like, here's a simple regression channel. It's the same process, but gives me levels of support and resistance at the same time. This gray line is the same thing as the regression line that I just had, but it does standard deviation levels. You can add, I think these are 0.5 standard deviations. You can add your 1s and 1.5s. See, so it'll show you different levels, and you see how the one standard deviation is generally the movement range of this stock from the average. So I know that as I go through and chart this, that the standard movement range is one standard deviation from the mean. That may sound confusing, but it's not. But it just kind of gives me more confluence to know that it may jump, it may bottom at this level or top at that level. So anyways, I'll let you guys go. Hope this helps. If you guys have any questions, just let me know. We're still working on getting Discord up and going. I'm working and just got a lot of stuff going on, so I'm trying to get as much of this stuff done as I can, just so I don't want to leave you guys high and dry. I know everybody's getting back to work and stuff. But invest in yourself. I mean, know that they could shut everything down due to COVID here in a couple months if there's a repeat breakout or something like that. You never know. But just invest in yourselves, guys. And I'm not saying I know it all at all. I'm a beginner still, so but seek this stuff out. Really dig into it, because someday, very soon, if you apply yourself, if you work on your craft, you could very easily be doing this for a living, where you wake up once a week, place some buy orders, and spend time with your family, and come back the next week and do that one time, and make enough to replace your income. If not, become pretty wealthy. So anyways, if you guys have any questions, let me know. All right, talk to you later.